President Trump reportedly pitched a 0% payroll tax rate for the rest of the year. Let's go to Jessica Smith in D.C. for the very latest on this. Jess.
Yeah, President Trump met with Republican lawmakers earlier today, and we know he pitched a payroll tax cut. He told reporters that was something that he was looking at, but now CNBC is reporting that he actually pitched a 0% payroll tax rate for both employers and employees through the end of the year. Treasury Secretary Steven Mnuchin also met with House Speaker Nancy Pelosi today, so he says there is some bipartisan interest in getting something done, but it's not clear how that payroll tax cut is going to work, because we've already heard from some Democratic lawmakers who are pushing back against the idea of tax cuts in response to the coronavirus. We heard from several who said a payroll tax cut would not help people who work off of tips or who have lost shifts. They say that other measures like paid sick leave would be more effective. So we'll see if they can come to any sort of agreement here. We know Democratic lawmakers are working on their own economic response plan. And then President Trump said that we would hear more about the administration plans today. So we'll be sure to keep you updated on what we hear from the White House at that 5:30 briefing later today.
So, Jess, we had a guest on earlier that was just talking about how easier it is for the Fed to make a move because it's 11 people. They're in one room. They have a meeting or they get on the phone. It's a lot harder for Congress to make a move. What is the timeline? What is the conventional wisdom down there that people are saying this is when the earliest that we could expect something to go through?
Well, Speaker Pelosi said that the Democrats might introduce their economic plan at some point this week. It does not seem that it would be up for a vote at this point. And we know that Congress is on recess next week, so they really need to get the ball rolling here. Again, Speaker Pelosi saying maybe introduce something this week. She didn't say that they would be cutting recess short or changing the schedule at all, but I think they kind of left the window open. If they needed to, they can do that.
Jess Smith live from Washington, D.C. with the very latest. Joining us now to discuss this and more is Ben Phillips, EventShares Chief Investment Officer. So, Ben, look, what do you think of this news? Trump's idea for a 0% payroll tax. What would that do?
Well, this is just one of the many economic stimulus measures, I think, being discussed. As your last presenter just said, you know, there might be a congressional action. It's probably going to be something from the White House. But I think we're expecting something to come. They passed, I think it was $8 or $9 billion emergency funding bill very quickly to address some of the early needs of the coronavirus. So they can move quickly when they need to. But I'm in Jess's camp, that it's probably going to take a little longer to get a congressional bill passed.
Now, Ben, in your note to us today, you made an addendum here, a note not as bearish as the tone sounds, but I think right now a lot of investors are struggling with, it's really hard to just soberly outline the state of the market without sounding fairly bearish. I mean, things are pretty ugly out there. And as you kind of outline the market for yourself and your positions right now, what are the major pressing issues and what are the areas that you think have been dislocated the most and are at risk of further dislocations here?
Yeah, so the areas of dislocation are obviously, you know, those travel related. We have hotels and cruises. I mean, the obvious ones out there. Even like semiconductors and consumer goods are going to take a hit as people aren't going to be out there, you know, in the stores seeing new products. Yes, there will be online shopping. That'll see a pickup, we think. Grocery delivery, things like that will see a pickup. Netflix, as you all were talking about before, I think that also does see, you know, pickup in viewership and things like that, on-demand video. So there's puts and takes to all of it. But I guess, you know, when I laid out my notes for you all to review, they were very bearish sounding. You know, it's like, here's everything that's going wrong. Here's kind of everything that's going to get hurt. But here's some areas of opportunity. You know, 5G telecom still going to have to be installed regardless of what's going on. Infrastructure spending at states are still increasing. You know, healthcare, that's going to see a big boon from all this. So there's pockets of opportunity. And then you look at like energy. Energy is just bombed out. It was bombed out before this started, and now it's just disastrously low. And I think it's actually time to start building some energy positions.
Ben, when you determine when you do want to build positions, when you're trying to figure out whether or not we have bottomed, whether that's the broader market or individual stocks or sectors, what are you looking for? What types of metrics are you keeping a close eye on just in order to signal to you that, hey, this is a buying opportunity at this point?
Yeah, so we look at a combination of just fundamentals and technicals. So from a fundamental standpoint, what type of valuations are you getting involved? You look like ExxonMobil, Royal Dutch Shell, these companies, you're buying them at 9-10% dividend yields now after their most recent move this week. And, that's substantial. We don't think there's a big risk for these dividends to be cut. You're buying them at extremely low single-digit PE valuations. I mean, they're really being priced in that energy is going away and, oil is going away. We don't think that's the case. So opportunities there. I mean, from a macro standpoint, we're watching technical levels. Things shot down, overreacted, we think, to the downside. We've blown through kind of downward support. Now, the question is, does this bleed into sentiment, investor sentiment? Does that keep compounding? That's when, recessions do happen, is when you kind of have investors all turn in the same direction and say, you know what, the world is ending right now. Let's completely de-risk. We think we're kind of only a first leg through that, but don't think that's the base case.
So, Ben, we often have you on around political events to get your sense of how we should be adjusting our portfolios, our thinking based on what's happening in politics. And it is an election year right now. We're still in the primary season. We have a presidential election in November. President Trump is not getting high marks right now for how he is handling the virus outbreak. When do we start talking about the election again? Is that going to come in to your thinking at all?
It doesn't come into our thinking right now. I mean, we're always investing, what's already occurring. So that's I think counterintuitive to some people. They say, well, aren't you forecasting what's going to happen in policy and building your positions based on that? We're actually always looking where there's already a catalyst underway, just the one that maybe the market's not, woken up to yet or aware of. And so that's where we find the real value in looking at policy as that leading indicator. So, I think there's plenty of opportunities out there. There's plenty of opportunities for the fundamental investor right now in those stock pickers, because certain things are just really dislocated. And this is the time when active managers can really make their money.
EventShares CIO Ben Phillips, great to talk with you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.